Hi, Chris. Thanks for coming on with the for recording for the holiday party this year. How are you?
Very well, thanks so much, John. Haven't seen you for quite a while. I like your mustache.
Yeah, thank you. It's it's coming in. I don't know how long I'll keep it, but it's good for
Uh-huh,
now.
uh-huh. 2020, full of surprises.
2020 is full of surprises. It was definitely a lot of new things happening this year, and I think a lot of people had to do some adapting to their trading strategies to do well for the year. I mean, some of them did pretty well, but there was also a lot of stuff that kind of went bad this year. So.
Yeah, it's for me, it was all the unexpected. I thought I had a pretty good plan going into the year, and boy, did that change. And not only trading, but everything else. And I got to say, I'm happy with the results, but it's not the way I expected to get there.
Well, I think that's an important part, is being adaptable. I think and this year just points that out, how critical having the ability to do some realizing, or we call it sensory acuity, right? What's happening to you, and then being able to adapt to it. I think that's an important part of trading. What do you think?
Well, had I followed my plan, I wouldn't have done that badly at all.
Hmm.
I pretty much dropped the M3.4U and the V32 SPX, which were sort of staples for the last year and a half or so before that.
Hmm.
And had I stuck with them, I would have done fine,
Yeah,
as proven by your own, trading income simulations.
sure.
So and I tend to, take a strong opinion on some stuff, which I shouldn't take opinions on. And we've talked about this before. And on sort of the mid to long-term decisions, my opinions are usually wrong, and I should just stay away from them. So I could have done probably better had I stuck with my plan, but other things kicked in which saved the boat. So I can't complain.
Yeah, as long as we make out well overall, we all go through the gyrations, so forth of our experience, and then,
Yeah.
if we're getting good results, that's good. So, what do you think your biggest lessons were this year as far as learning?
Uh, well, on the I have I think I talked about it last year already. I have a weekly. I like the short-term stuff, so the weekly stuff,
Sure.
and so I have a broken wing butterfly on the SPX that I do weekly, and that did very well this year. I stepped out of it from like March until May.
Hmm.
Had I stuck with it during that period, it would have been on planned capital 100%, as it was maybe 50%. Because I lost that chunk of time, I'm pretty much break even. Of course, during the February, March drawdown, that took a huge hit. But
Hmm.
had I stuck with it, I would have been fine. And so my conclusion out of the whole thing is I really shouldn't have these opinions on the market. I should stick with my plan, and my plan says put on the weekly, butterfly, broken wing butterfly. Just put it on.
Right. So you're saying you got spooked out of the market because of the big down move, and you just decided to stay out for a while.
I expected a retest of the bottoms,
Hmm.
and it kept me out of the market. And then, of course, during that run up, I didn't want to put on a bullish, you know, broken wing butterfly after a 400-point Dow day or a series of 400-point Dow days.
Hmm.
But it kept on going up. So,
Well, you don't know because it could have just as easily come back and retested it. But yeah, and I think if we don't understand the marketplace, I don't think it's a terrible idea to be out of it.
well, um, I'm what saved me this year was really my stock portfolio. I was hedging
Hmm.
it to the downside, and I called that right. So end of February, I already put on risk reversals on the stock portfolio. My stocks were basically the FANG stocks and Tesla,
Hmm.
and then they came back with a vengeance, and I rode those all the way up. So I made money on my stock portfolio this year like crazy, and my
That's
income
good.
trading did did okay, but didn't do as well as it would have had I stuck to the plan.
Yeah, I mean, these are, for the most part, market neutral strategies. And of course, we take on risk in trading. They got to be one direction or the other or both directions. So a heavily directional bias market can be problematic for us.
Yeah. And it sure was directional, and it still is. And I don't know what to make of it. I've actually taken those stocks that have run up so much this year, and I've put on sort of synthetic butterflies on them. So
Okay, yeah.
I sell a combo on the downside and debit put spread on the upside, and build a butterfly out of it. And I'm just locking in those gains. I don't want to take any losses on those because I'm expecting a pullback at some point. It's got to be.
Yeah, yeah. Now, so you're still taking opinions in the marketplace then?
Yeah, well, my opinion is I'm happy with what I made. I don't need to
Yeah.
make any more on those stocks. I'm not going to give it back this time because I've given it back a lot. I mean, on Tesla, on the FANG stocks. I mean, they've had
Right.
roller coaster over the last couple of years.
So that's great, though, using option strategies along with your stocks to help protect your portfolio on the downside.
Yep.
And then now that you believe we're topped out. So, I mean, both of those, I think it's important that, you talk to yourself about your decisions are always bad, but they're not.
No, as I said, I'm happy with this year, just not at all what I expected. So
Right, but it's not I mean, I'd like to point out, though, that you're making decisions in the marketplace, and some of them are right and some of them are wrong. I think focusing in on the wrong decisions and saying that you're wrong all the time, I don't know that that's beneficial to you because obviously it's benefiting you in some ways.
Well, for me, it's difficult to do an M3.4U or a V32 if I think we're high in the market. The weekly strategies, on the other hand, for me are much easier to go in again and again and again on a weekly basis because sort of that, market sense of we're going up, we're going down, is kind of irrelevant in the, 5 days to expiration that I'm into things.
Right.
And so it's much more a probability call, and you're not adjusting. They're all no-touch strategies. So it's either good or bad, and you got a next one to go, and you got 52 of them to do a year, and there's plenty to look forward to. So
yeah.
I don't dwell on something I've been in for 2 months and feel like I made a wrong decision somewhere that I should have done differently.
Well, that's a good thing to know about your personality, right?
It fits me. It fits me. I know many people can't stand these weekly strategies. I've really come home to them, and it's where I feel best.
So yeah, nice quick feedback. Broken wing butterfly. I make it. I don't make it. Are you slightly bullish positioned with those?
Yeah.
Yeah.
Basically, I'm putting them on for about a $2 credit with a $25,000 downside risk, and they often come off in one day with $1,000. So I have a ladder of target profits starting at $1,000 and then going up $500 a day, and then I'm out after 5 days in the trade in any case.
Yeah, nice quick results, and you get it back and move on.
And a stop loss of $1,000. And that's the tough part. I can set a limit order on getting the target profit. Getting out with a loss is hairy because the stop loss orders, they don't trade well on broken wing butterflies on the SPX. You have no idea what price you're going to get. So
right, you don't know what your prices are going to be. Plus, you got the gaps and stuff to deal with. So
right. But it works. So I kind of have to hang around and keep my alerts on all day intraday, but otherwise it's a no touch. And the only reason I have the alerts is for the stop loss.
Right.
Everything else is ordinary.
Interesting. No, that's awesome. That's awesome. So glad you kind of found your way. And the thing is, you learn all the stuff that we learn in the memberships and stuff. But the thing is, ultimately, it's good for people to go out and apply that knowledge to their personality and to develop their own trading style. I think that's awesome.
Absolutely. I mean, that's what you've done for me. You gave me this whole buffet of strategies, and I could kind of figure what I liked, what I didn't like, and came to the conclusion that I'd rather have a no touch on a weekly basis than have something that I'm adjusting every week or even more frequently over a longer period of time. It's just me.
Yeah, and that's fine. And I can certainly understand, you think you're in a battle for 60 days and then you end up taking a loss on it sometimes. And that can be a little bit discouraging. And the feedback is very slow for somebody who's requires faster feedback. Then the weeklies certainly are a good option for them. So.
Right. And I love the frequency, the fact that you've got these 50 trades a year.
Yeah.
So you don't have to dwell on your loser. I mean, it's just like it's history already after a day.
Yeah, jump back in and do it. Yeah.
Clear the mind, start over. Yeah.
Right. You just wish you jumped back in earlier this year, right?
Right.
Yeah, we get that. I think a lot of people, you're not alone. I think a lot of people got spooked out of March, the March move. That was the biggest point move we've ever seen. And I got very aggressive and started buying stuff through that and did very well this year. This is the best year I think I've ever had in trading. Actually, I know it's the best year I've ever had by far. And I think it's just because of the ability to get aggressive when everybody else is afraid. And I think working on that for all of us is going to be beneficial.
Yeah, well done. Well done.
Yeah.
So you didn't think we were looking at a double dip, a retest of the lows, or you just...
I didn't care.
You didn't care. You just...
Right. I in other words, you're looking very shorter term. I look a lot longer term. And I just said, at the prices things are at now, it's a good value and it's time to buy. So just loading stuff up and bullish with the options positions. And it ended up being a really good year. So can't complain.
Excellent. Great.
Yeah.
Great.
Yeah. So
well, I would think that most of the membership has done well.
I think so. I mean, for the feedback I've gotten, most people have done at least okay. Some people have done spectacular. And I haven't really heard of anybody, although there's probably people out there, I'm sure, that kind of got beat up. But if they did, it's probably because they fed into the fear, so to speak.
Mm-hmm.
Yeah, and they're just afraid to get bullish.
Yeah. Well, and I'm still bearish. Look what we've been through,
But you can be bearish and make money, so you're living proof, right?
Exactly. I'm happy. I'm a happy bearish guy. Yeah.
Nice. Awesome. So yeah, I would say a success you achieved was making money in this crazy year, despite the fact you had to, you're kind of freaked out a little bit in the middle there.
Yeah, definitely.
Nice. That's awesome. So you have something you're planning to do next year to improve your trading?
I'm going to stick with my weekly broken wing butterfly, and I'm going to size it up. So I've got, calculations and back testing, which shows me how it performs. And I've also got a sizing strategy that I can apply to that, a compounding strategy that I haven't done yet. I've kept fixed size every week, and I'm going to start using that next year. Right. And size it up. That's where the real gains come in compounding. We've had this discussion before as well.
Sure.
I would increase size according to account. As the account size grows, I would increase size. As I have losses, I would decrease size. And
yeah, well, compounding is very powerful, as you know. And as long as you have a strategy that works for you, that's awesome.
Right. I'm not going to try and second guess it and, upsize after a loss and downsize after a win. I've heard that strategy somewhere, but I'm not going to do it.
Here's the thing. You can do both strategies and do okay as long as you're consistent.
Right. Absolutely.
Right. It's randomly dumping size, randomly increasing size based on your emotions.
Yeah.
Right, that's going to beat you up.
I'm going to do it by onesies and twosies. I mean, it's going to move slowly.
Right, and I know I've seen your plan for increasing capital size. It's very incremental. It's not like you're taking it and you're putting on 3 times the size.
No.
Which is what most people do. They'll take on a couple wins. They'll go from trading $10 to $5,000, right?
No. It's I'm doing 10 contracts now, and according to my back test, it's going to take maybe about 5 to 10 weeks, and I'll add a contract.
Yeah.
But then it gets quite frequent. And then what do I do when I get up to like 500 contracts? so I'll worry about that when the time comes.
Let's see if you run into that problem. And we can talk about that.
Right. So that's esoteric. Yeah. Okay.
Exactly. Let's not get ahead of ourselves, right?
Yeah.
All right. So what's one piece of advice you'd give a struggling trader?
It's always the same. I mean, for me, and struggling, I guess you can always look at some part of you that's struggling. It's,
That's a
do
good
your
point.
back tests, build your confidence, take your losses when you're supposed to take your losses. Those are the 3 critical things. Specifically on taking losses, if I look back on my trading history, and I started in 2006 with options, I would have at least double the performance, at least, had I taken my losses as I was supposed to. It's the big losses which really deteriorate.
When you're in it, it's so hard to take the loss. What do you do to take that loss?
I think it's my experience now. It's just saying it's just not worth it. And again, the weekly strategy helps so much. I'm going to take
because you experience a lot more losses, right, in a short period of time.
Yeah. There's no escaping them. I mean, you can't beat them. They come, and you take the $1,000 loss, or you take a $5,000 loss. You take a $5,000 loss, you're screwed for the next couple of months.
Yeah.
You gotta take the $1,000 loss for the system to work. Otherwise, it doesn't. And of course, with gaps, you will have those horrible, like in March.
Right. We want to minimize those, though, right? I mean, you can do that. I mean, you get out when you have control. When you don't, you don't.
And and they will happen, and they're in the back test. They're everywhere. So.
You mean you didn't filter them out of your back test?
What's that?
You didn't filter them out of your back test?
No, not yet.
And pretend everything was going to be okay?
No. In the back test, I think the biggest loss was $12,000.
Right. But the thing is, I think you have to let that happen. You have to be aware as a trader that this is what trading is. I mean, it happens time to time.
It is normal, yes.
And you can lose and you can still make money, which is really cool.
Yeah. You got to know what's coming later on, and you can only do that if you've done your back testing. If you haven't done the back testing, you get spooked and you think you can think the market and all that.
Right. I'm on this big thing now about having people back test realistically and not filtering out losses out of the past just to make the system palatable so you can have confidence in it, because that doesn't do you any good.
I remember when I did back testing and, maybe 10 years ago, and I never did that, but you're always stuck with these decisions, well, this could go either way, and those times it was like, oh, well, this one I would have decided that way, and it's to the positive.
Right, I would have done that.
Right, and now I've come to the conclusion, that's no good. Go the other way. It feels much better because you still come out ahead.
Right.
Even though you assume a worse situation than what was a likely case. Just take the worst situation, and if you still come out ahead, then you feel really great about it.
Well, even more than that is it gives you the resiliency to actually be able to trade through it. Because if you're always taking the right choice, you convince yourself that this bad thing's not going to happen. And then when it happens with real money, you're completely freaked out.
Right.
You're not prepared for it.
You're not making good choices at all. You're making really stupid choices at that point.
Right. And that brings people into this cycle of just bad decisions, and that's not good. So that's awesome advice. Awesome advice. All right, Chris. Well, any final words here?
What do I have? I'm just looking forward to getting back to normal. Seeing the kids.
Too.
Yeah, it's been a long year, but I'm looking at getting back into the M3.4U. I just like that in terms of a midterm strategy as kind of a balance to the short-term stuff.
Yeah, that had a good year this year. Other than if you had 2 months, right? The 2 monthly cycles you get whacked out of, but other than that, it's been a really good year. Yeah.
And I'm actually using those rules or similar to those rules on my hedged stock portfolio. So I have these simulated butterflies on my stocks, and I,
use the same basic rule set. Yeah, you can apply it to anything, right? So that's wonderful. Yeah.
Yeah. Yeah, I just like the simplicity of the adjustments, and that keeps me with it.
Awesome.
Otherwise, all is good, and stick with you.
All right, sounds good, Chris. And have a great new year. And of course, as always, feel free to contact me during the year. We'd love to hear from you. I always love to hear from all the students. And trade well.
Okay, thanks so much, John. You take
Okay,
care. Greetings
thanks.
to Sherry.
Okay, thanks. Bye, Chris.
Okay, bye-bye.